Hi there and welcome to Moneycontrol. There's a lot of action brewing in the domestic mutual fund space, lot of M&A action. Yes, we are referring to the hottest MF deal in town, the ongoing sale process of IDFC Mutual Fund. Around 4 months back, that's when the promoter group companies had decided that they would initiate the sale process. Of course, that came on the back of a lot of impatience among some shareholders. These shareholders felt the company was not moving ahead at the pace at which it should when it came to the entire value unlocking exercise. Nevertheless, the company heard the shareholders out. They opted for the sale process and they went ahead and appointed investment bank Citi as the sell side advisor for the deal. Coming back to the exclusive details that we have on this big bang deal, we are given to understand from our sources that 4 strategic suitors have been shortlisted for the next step of this deal. Who are they? Bandhan Group, IndusInd Bank, that has been along with the promoter group company. We have Invesco Mutual Fund and we also have Sundaram Mutual Fund. These are the 4 strategic players in the fray as of now that have made the cut. They will go ahead, conduct due diligence, and after that we are given to understand from our sources that binding bids for this mega deal are expected by mid-March. That's around March 15th. The sellers seem to be in a bit of a hurry. We are given to understand that a winner potentially may be announced by March end. Remember, the deal value, what we're hearing at this point of time is upwards of 4,000 crore rupees. But those are the initial bids that we're given to understand. Keep in mind also that the last big deal that was struck in this sector was the recent sale of L&T Mutual Fund, of course, and that was to HSBC for around 3,000 crore rupees. Now, coming back to the other contours of this deal, we are also given to understand from our sources that there are several private equity players in the fray. They are willing to add the financial muscle and tie up or form a consortium with any of these 4 strategic players. So who are these private equity players? We have the likes of Carlyle, we have the likes of T Associates, Kedara, True North, Warburg Pincus. These are some of the players that are willing to tie up with these strategic players that are shortlisted. And keep in mind that one consortium can have more than one PE player. So that is also a possible construct going ahead. Those are the exclusive deal details that we have for you at this point in time. Now, what seems to be the reason why IDFC Mutual Fund is attractive? It's got around 1.2 lakh crores of assets under management, and it's not every other day that you find a top 10 player in the MF industry on the block. So therefore, it will give size and scale to any incoming acquirer. It's mostly debt oriented, not too much of equity. That may have an impact on the valuations, but keep in mind that it's a profitable entity. So those are some factors around the target. If you look at Bandhan Bank, Bandhan Bank, IndusInd Bank, these are banks that will look at expanding into the ancillary activities beyond core banking. That's insurance and mutual funds. So that's why it makes sense for them. If you look at the likes of Invesco and Sundaram Mutual Fund, of course, they will just try to bolster their already existing position in the Indian MF space. Sundaram, of course, already started off its inorganic growth trajectory. Last year, they acquired Principal Mutual Fund for around 330 crore rupees. Now, in the recent past, there's been a lot of regulatory scrutiny as far as the Indian mutual fund space is concerned. SEBI is not particularly comfortable with a private equity player acquiring a majority stake in a mutual fund, and therefore that's the reason why perhaps the Blackstone L&T Mutual Fund deal talks that were going on for a long time, they finally fell through. So that's one aspect to be kept in mind, and that's the reason why we are seeing situations wherein PEs are likely to tie up rather than going solo. Also, SEBI had relaxed the eligibility criteria as far as launching mutual funds is concerned, and that was considered to be a big thumbs up as far as the fintech players are concerned. And what happened there was that the profitability criteria was removed, but the net worth criteria was doubled. So that's also one aspect regarding the regulatory environment that we need to keep in mind. We have seen many such deals. We have seen Navi, SMF, we have seen White Oak, we have also seen Grow, which is backed by Zerodha, going ahead and acquiring Indiabulls Mutual Fund. So a whole host of deals have happened in the mutual fund space. Ps are quick to spot any of these mega trends. Let's wait and watch to see how this one goes ahead and concludes. With that, it's a wrap on this update. This is Ashwin Mohan signing off. Stay tuned to Moneycontrol for more news, views, and updates.